right, friends. We are starting this podcast with the one and only Miss Shivani. Miss Shivani Shah.
Shivani Shah, everybody.
Yes. So Shivani is an amazing attorney. She's an amazing friend, but she's also a very, very competent attorney. Real estate attorney. Yeah.
Yeah, and very competent. The most thorough, diligent.
Oh, thank you.
Yeah, unbelievable. Thank you.
Yeah. So she's with us here for this segment of the podcast where we are going to be talking about first-time home buyers and their process of buying their first home, the tips and tricks and, the pitfalls along with the process. So before we get started with Shivani's input, let's just have a quick review. And we have another podcast about the actual process for first-time home buyers. But for now, let's just do a quick summary about the first-time home buyer process. So first-time home buyers and the process of buying a home. So in a nutshell, first you guys get pre-approved. So you know which price range you are going to look for a house for, and that will definitely limit which towns and areas and type of homes and square footage, etc. that of houses that you'd be looking for. So that's usually what people talk about when they say, okay, what's the first thing? I'm ready to buy my first home. What's the first thing I need to do? The first thing you need to do is pre-approved. Now there is
just to that point before I forget. When you're getting pre-approved, especially now with the rates being where they were, I mean, I guess if you're just coming into the market, you don't know the past of 3% interest rates. But being able to factor in insurance rates have gone up, what you're comfortable with for a monthly payment, because it's not always what you're approved for. Sometimes the banks, even now, if you have a decent income, but you have to factor in your expenses. So I have found that my buyers that really know their numbers and they say, I want to keep a payment within X amount. And then obviously working with great lenders who can come up with a pretty good estimate of what a payment is. But yeah, you're not just getting approved to a certain amount, but what does that translate to for your monthly payment?
Yeah, absolutely. Yeah, so pre-approval, the second step in the process is you go look for houses, you go to open houses, private showings if there's no open house available. And I would say something important in this step of the process is, especially when you're a first-time home buyer, you don't really know what you're looking for. Even if you have an idea in your mind, you only will know it like once you see it. So going and seeing as many houses as possible is usually a good idea to do. So you kind of familiarize yourself with the price points, with what you get for that special price points, specific price point, So that's the search phase, and once you identify a house, the next step is to put an offer. So you do need a pre-approval to put an offer, and that's why we started with that first. So you reach out to your real estate agent. Hopefully you've been working with a real estate agent by now. You reach out to a real estate agent, you say you want to put an offer, they put the offer together. So now when it's the spring market, usually it gets like really competitive. Chances are this first offer is not going to be your most competitive offer because you're just getting yourself familiarized with the whole process and what you're comfortable doing, etc. Also, most people will end up spending way more money than they thought they would be spending. So if it's your case, don't worry, you're like within the 95%. You're within the 95% of the buyers out there, so don't worry about that. But that's why it's really important to have kind of an idea where you ideally want to be and then a max that you don't want to go above. So let's say you get your offer accepted, congratulations. From there, you can have an inspection if you wish so. But we do recommend having an inspection for first-time home buyers, I think. I think for all buyers in general, but even more for first-time home buyers. Even if the house looks pristine, it's just really interesting to get to see how the house works, where is your main water shut off, for example, which are good information that the inspector will go through. So inspection.
I just was going to say, and now that the fact that you cannot waive an inspection, you can't signal to a listing agent that your client's going to waive an inspection. And I always also recommend an inspection to really get to know a house. So it's kind of level the playing field, which is good. Always recommended an inspection.
Yeah, so
it definitely has, because I've just seen now where it's required in essence that in so many situations previously people would waive inspections, right?
To be competitive.
To be competitive. And I would always hear from those people after the closing, oh, what about this? This came up and this happened, or this came up. Well, you waived your inspection. So it's really nice to have that now. And I'm seeing, like you're saying, Drew, there's more of a level playing field because I see more negotiations post-inspection now as well. So it gives a little bit more room to negotiate there. So agreed.
I got
Beneficial.
$14,000 off after an
Beneficial.
inspection recently.
How much?
$14,000.
Wow, must have been some big problems coming
$9,000
up.
credit and
Wow.
$5,000 price reduction.
Yeah, there was quite a bit of things after the inspection.
Yeah, it was,
and a lot of due
there
diligence.
was a couple of quirks, and actually the house,
Yeah.
it said even on the property card that it was from 1957, and then
Yeah.
when you dug it was at least 1930. It was
Oh,
kind
geez.
of a weird situation where the house had some elements of an older home with the low ceilings, and then when you got into the attic, the wood was 100 years old, yet the house was only supposed to be 57.
Oh.
But anyhow, I digress.
Yeah. No, for another podcast, we're definitely gonna have a series about like all the special houses we get to see and the
Yeah.
special problems we get to face.
Whale homes.
Yeah, and I'm sure we're the
Tell me about it. We have a listing right now. And the agent accidentally sent me a message. It said, sorry about that weird house. They were texting their client, they thought.
That's
Yeah.
good
But they
stuff.
texted me. Yeah.
Yeah, so you get your offer accepted, you do the inspection, you negotiate after the inspection, you get to pick a lender next, you can do some shopping around, or you can go with the lender who got you pre-approved, and then you submit all the paperwork your lender is asking for, you get a commitment, a letter from the lender that says your mortgage is good to go, your loan is good to go.
You pick an attorney.
Yeah.
So most lenders will allow you to use any attorney. Some of them have a specific closed list, but early in the process, you want to see who you want to work with.
I
for
forgot an
attorney.
important step.
Yeah.
I'm going to rewind, cut this part.
Yeah.
So then after your inspection is done, next is the PNS, the purchase and sale agreement. And at that point, if you don't have an attorney, then that's where you get to hire an attorney. You negotiate the purchase and sale agreement with the other party. You sign the purchase and sale agreement,
Do you
and
want
that's
to say
where.
anything? What about Shivani? This is your.
Oh, no. I mean, I think when you're
About
choosing
that
an attorney,
process.
you want to make sure early on in the process, when you're choosing the attorney, that they are able to work with your lender. There are some lenders that will limit the attorneys that they will work with, and there's some attorneys that will limit the lenders they'll work with. So in my case, we limit lenders that we work with. We'll only work with lenders who've kind of proven themselves and actually delivered, time and time again, because there's so many lenders who will make promises that, yeah, we're going to meet these deadlines, and meeting the deadlines is the most important thing. We're going to meet these deadlines, and they're kind of salespeople up front, but then when it comes time to actually deliver, it doesn't happen, and that can cause a lot of stress for a buyer. It can put a deposit at risk. So my advice is to make sure that the lender that you choose can work with your attorney, your chosen attorney, but also that they can meet the deadlines that are in your offer.
Yeah.
Without issue.
Especially when it gets really competitive and all lenders start being like super aggressive with the timeline.
Right. Yeah. Oh, yeah. We can do it. And then when it comes time to it, oh no, we're still waiting for the appraisal. Oh no, we need this or that.
Yeah, and it's really important because now your 5%, your PNS, whatever you put down at the PNS, now is in jeopardy.
It's at
because of
risk.
that.
Yeah.
Yeah. So with the offer, you usually put $1,000, $5,000, whatever number, and then usually with the PNS 5%, but all of these numbers can change. You can put 3% for PNS, you can put $5,000 with the offer, but you need a certain amount to bind the offer and another certain amount, bigger amount, to bind the purchase and sale agreement. So, and that period from the purchase and sale agreement's date until the closing date is where you work with your lender to get your loan approved, and where the attorney will do a title search.
Right. So typically there's a mortgage contingency, and that can be waived as well. Not recommended. Don't love it when people waive their mortgage contingency. And essentially when you waive your mortgage contingency, you're saying, yep, I'm going to close no matter what. And yeah, you might be qualified. I have buyers. They're great. They're qualified. But that's not the only thing that needs to be qualified for a loan to be approved. It also is the property itself. And typically when it's a single family home, usually the only issue that could come up is the appraisal that may result in you not qualifying, right? Although there are other issues that could potentially come up, depending on if something's in major disrepair. Sometimes an appraiser will have issue with that, right? But if it's a condominium, it's a whole other story because the condo needs to be approved. And there is where you really see issues come up. So I do not recommend waiving your mortgage contingency if you don't have the extra cash laying around in case you don't get the mortgage.
That's the only time is that your parents say, all right.
I can help you out, yeah. But otherwise,
we've had people waive. We had one once where it was one offer on the house. And
they waived
it.
It's
you didn't even need the leverage.
To do it.
It wasn't
no need to do it.
Multiple offer situation. So
yeah,
we would always protect our clients in a situation
to keep
like
that contingency in place.
I never waived one when you need a mortgage, and it's usually not that huge of a factor. The appraisal, making the appraisal not matter, is usually enough anyhow, right? If you say, hey, we'll cover any deficit, that's usually one of the biggest concerns. If somebody's very qualified, they should get the mortgage, unless they lose their job, which was another thing I was going to say.
Right.
If you lost your job. I don't want to bang it and have
trouble.
it go,
then you're in trouble.
Bum.
Yeah, and if if you lose your job, really, the risk period is between the commitment deadline. So say you get the commitment from the bank. Yeah, we're all set. You're approved. Everything's good. We're closing. That risk period is between that commitment deadline and the closing. Anything happens in between that time. So usually you want to tighten up that time and try to make the commitment date as close to the closing date as possible to limit that risk period.
Is pretty standard.
Yeah. But I've seen people who will have a commitment who will be weeks and sometimes months before they're closing. And again, if you can tighten that up.
With new construction, you can have many months before.
Totally. Yep. Yeah. So it's best if you can tighten those days up. But back to the main point, between P&S and commitment date is when the buyer is going to work with their lender to provide all the information that they're requesting to get that commitment on time. And that's, again, where a lender usually fails, depending on the lender, where they're like, oh, we need this or that, and push dates out. So those dates are super important to confirm with your lender up front. Can you meet these deadlines?
Right.
But then also, again, back to the mortgage contingency, waiving it when there's a condo. Not a great idea because not only is the appraisal an issue, but approving the condo. And with the condominium, there's so many factors. If there's litigation, if there's not enough owner occupancy, if the finances are not, or there's a big assessment coming up. These are all, or the insurance isn't satisfactory to the lender.
We had one in Stoneham where there was a structural problem with the buildings, and you didn't see it until you really dug in, but the lenders did not want to finance it.
Yeah, so it happens.
Somehow we got it through. There were two competing lenders.
We're gonna have a whole other podcast about condos because it's a totally different.
But the bottom line is don't waive your mortgage contingency unless you have really great cash or really great parents who are ready to pay for you if you mess up.
So you get your commitment letter from the lender, and hopefully the title is back also clean and everything is good to go, and you get to close. So those are the steps in a nutshell. So I'm just going to summarize them. You do a pre-approval, you start your search, you get a property identified, you put an offer on it, you get your offer accepted, you have an inspection, you put the purchase and sale agreement together, and you pick an attorney, obviously, before then. And then all of the rest is mostly in the background where the lender is going to work on getting all your loan approved. The attorney will work on the title, and eventually you get to a commitment date where you have a commitment letter. Your loan is good to go, and you get to close. So that's in a nutshell